Welcome back to Investing Talk Podcast. Today we're tackling a question that's, well, probably on the minds of many of you. Is Circle Internet Group a good time to buy now? We've gathered some really fascinating source material articles, market data analysis to really unpack Circle Internet's recent performance, its place in the market, and what the future might hold for this pretty significant player in the stablecoin space. Our mission here is basically to distill the most important nuggets of knowledge, help you navigate the complexities of this stock so you feel genuinely well informed. Before we jump into the analysis, though, we want to invite you to be part of our community. If you find this discussion valuable, please subscribe, maybe like this episode, and definitely leave a comment below. Your engagement really helps us bring more of these analyses to you. And hey, if you're feeling extra generous, consider buying us a coffee. Plus, if there's a specific company you'd like us to look into next, just drop it in the comments. We really love hearing your suggestions. All right, let's kick things off. Let's get a clear picture of who Circle Internet Group actually is. What do they do?
They're a big name in fintech, right? Especially crypto infrastructure and stablecoins.
Exactly. At its core, Circle operates right in the middle of the digital asset sector. They're probably best known as the issuer of USDC. And for anyone unfamiliar, that's a stablecoin designed to be redeemable one-for-one for US dollars.
Right.
The company's led by Jeremy Allaire, who's a pretty well-known figure, and that definitely lends, some brand authority in this space. What also kind of sets them apart is their regulated posture and the fact they have a U.S. listing that distinguishes them from a lot of the private crypto firms out there.
Okay, and they just dropped their Q2 2025 earnings. Looking at those headline numbers, what immediately jumped out at you?
Well, for Q2 2025, so ending June 30th, Circle reported a really significant 53% jump in revenue year over year. That hit $658.1 million. And what's maybe even more impressive is that this actually topped the consensus analyst estimates, which were around $645.7 million. So beating expectations on the top line.
53% revenue growth? That sounds genuinely positive, impressive even. But I also saw reports of a wider than expected loss for the same period.
Yeah.
That could be a bit, jarring for investors. What's the story there?
It can be jarring, absolutely. But what's really fascinating here is that while the company did swing to a net loss of $482.1 million, or 4.48 cents in a share.
Which was much wider than expected, right? Like 97 cents.
Exactly. Much wider than the 97 cents per share loss analysts were looking for. But Wall Street didn't seem overly concerned. And the key insight here is that this loss was largely driven by substantial one-time non-cash charges. We're talking $591 million total.
Okay.
A huge chunk of that, $424 million, was for stock-based compensation tied directly to their IPO and vesting schedules. So these aren't really reflective of ongoing operational performance. They're more like, the costs of going public and setting up compensation. It means the underlying business might be healthier than that big loss number suggests at first glance.
Okay, so if those losses are more about, let's say, IPO accounting than ongoing issues, what does this tell us about the core business health? Is USDC usage still growing strongly?
Oh, absolutely. That's the core strength here. USDC showed incredibly robust growth. Circulation grew, get this, 90% year over year. It hit $61.3 billion by the end of Q2 2025.
90%, wow.
Yeah, and it even climbed further to $65.2 billion as of August 10th. But here's maybe the even more telling part. On-chain transaction volume for USDC. It grew 5.4 times year over year, nearly $6 trillion in Q2 2025.
6 trillion.
6 trillion. That number really points to growing usage and adoption across the network, not just people holding it. And we also saw what they call meaningful wallets, basically wallets holding more than $10 of USDC. Those surged 68% year over year. That suggests broader consumer and maybe enterprise adoption too.
That's a huge jump, a 90% rise in circulation, $6 trillion in transactions. It really sounds like there's significant tangible demand for their product. That's a strong signal about their market position.
Absolutely. And that kind of operational strength naturally leads to the question of how the market reacted.
Right, let's shift gears then. What about the stock itself? It really took off after its IPO back in June, didn't it?
It really did. The IPO priced at $31, but then on its first day of trading, June 5th, it closed way up at $83.23. And since then, well, up until August 2025, the stock had returned a whopping 70.1%. That definitely outperformed peers like Coinbase, PayPal, Fiserv over that same period.
70% is huge. But wasn't there some recent pullback?
Yes, good point. In the week leading up to August 20th, 2025, the shares did drop about 13.3%, so it underperformed its industry and the broader sector in that short time frame. The price recently has been bouncing around, let's say, the $120 to $135 range based on some disclosed transactions, so definitely some recent volatility.
Okay, and this brings us to something interesting. We saw news about insider selling, specifically from the CEO, Jeremy Allaire. What should we make of that? I mean, some selling after an IPO is normal.
All right. It is normal, and that's a really perceptive question. It's something investors always watch closely. So on August 18th, 2025, CEO Jeremy Allaire sold 357,812 shares. The price was about $127.08 per share, and it was part of a secondary offering.
Okay.
Now, it's important to note he still holds a significant stake. Over 16 million Class B shares plus indirect holdings. That's substantial.
So it wasn't like he dumped everything.
Not at all. The insight here is trying to figure out if this is just routine monetization after an IPO, which happens all the time, or if it signals something more worrying, like a lack of confidence. The scale of selling, while not tiny, seems more aligned with that expected post-IPO monetization phase. For now, I'd call it maybe a yellow light, something to monitor for sustained, large-scale selling from multiple insiders. Not an immediate red flag about the long-term view, but worth keeping an eye on.
That's helpful context.
Well,
Okay, so we have strong operational growth, stocks that flew high but saw recent volatility, and maybe some expected insider selling. Given all that, how are analysts actually viewing the company's valuation right now? Is it looking expensive?
yeah, that brings us to a really crucial point for anyone thinking of investing. The shares are currently considered, well, overvalued by some analyses. There's one metric, a value score, that gives it an F, which isn't great.
Ouch.
And its forward 12-month price-to-sales ratio, or PS, which we often use when companies aren't consistently profitable yet, so PE doesn't really work, is sitting at 11.1x.
How does that compare to the industry?
It's significantly higher. The industry average is more like 3.38x.
Wow. Okay, big difference.
It is. Now, for some context, Deutsche Bank recently initiated coverage. They gave it a neutral rating and a $155 price target. That suggests they think the shares are, fairly valued around that level, but maybe not a screaming buy right this second. So the takeaway is, while the growth story is compelling, the current price seems to already reflect a lot of that future potential.
Got it. So high growth, but maybe a high price tag to match. Despite those valuation concerns, though, it sounds like there is still potentially a lot of growth drivers. What are some of the key catalysts on the horizon that could push Circle forward?
Yeah, definitely some potential catalysts. The regulatory environment is a big one. For example, the passage of the Genius Act back on July 18th. That's legislation aiming to create a clearer federal framework for stablecoins.
Right. More clarity is usually good for business.
Exactly. That kind of legal clarity is absolutely crucial. It could pave the way for much more enterprise adoption, maybe getting stablecoins like USDC integrated more deeply into traditional finance. Imagine major banks feeling comfortable using them routinely. That's a huge potential market.
Okay, regulation is one piece. What about the company's own innovations? Are they just relying on USDC's success, or are they actively building new things?
Oh, they are absolutely not resting on their laurels. Circle has been incredibly busy, which is vital to stay ahead in this fast-moving space. They launched the Circle Payments Network back in May. The goal there is to help financial institutions use stablecoins for payments. They apparently have over 100 institutions already in the pipeline.
100? That's quite a pipeline.
It is. And they have active payment corridors set up in places like Hong Kong, Brazil, Nigeria, Mexico. Then in July, they introduced Circle Gateway. That's designed for seamless cross-chain USDC usage, making it easier to move USDC between different blockchains. And they launched that with 8 new blockchain partners, which really expands the utility and reach of USDC.
Cross-chain is a big deal for usability.
Absolutely. And maybe most notably, they're getting ready for a test launch this fall of something called ARC. ARC is planned as an open Layer 1 blockchain. Think of it like a foundational network, kind of like Ethereum, but specifically built for stablecoin finance. And it's designed to be compatible with Ethereum infrastructure.
A whole new blockchain just for stablecoins.
Essentially, yes. With a formal rollout planned by year-end, the CEO, Jeremy Allaire, is clearly bullish on this. He said they are at the fulcrum of a massive mainstream embrace of stablecoins in the financial system. It really shows how fast things are moving.
That sounds like incredibly aggressive expansion. But clearly looking way beyond just issuing USDC. It really is a race for innovation. Are they also building new partnerships to push these initiatives?
Yes, absolutely. Their partner base is expanding, and it includes some really big names now: Binance, Corpay, FIS, Fiserv, OKX.
So mixing crypto natives and traditional finance players.
Exactly. That kind of widespread integration is a huge strength. It embeds their products deeper into the whole financial ecosystem. They've even introduced something called USYC. It's a yield token, meaning it's designed to generate returns, and it can be used as collateral. They've expanded their partnership with Binance specifically to accelerate its adoption. So these aren't just random deals. They seem like strategic moves to broaden their reach and the usefulness of their offerings.
Okay, so what does this all mean for their competitive position? It sounds like others are definitely moving into this space too. It's not an uncontested field by any means.
No, definitely not. Competition is stiffening significantly. While Circle certainly has advantages, its regulated status, its existing network, those partnerships we just talked about,
Right.
others are making serious moves. Coinbase, for example, has that deal with Shopify to allow USDC payments on its base network. That brings on-chain payments to potentially millions of merchants.
That's huge reach.
It is. And Feasterv, a traditional payment giant, is planning its own US dollar-pegged stablecoin called FIUSD. So this really highlights how important Circle's own innovation like ARC and their expanding partner base are. They need it to maintain and hopefully grow their lead. It's a constant race for adoption and integration in this market.
It sounds incredibly dynamic.
Yeah.
So given all this exciting growth and innovation, but also the competition and that high valuation, what are the primary risks for you as an investor to really consider here?
Yeah, that's the million-dollar question, isn't it? If we sort of step back and look at the bigger picture, the crypto sector itself just carries significant inherent risks. That's unavoidable. Circle themselves in their filings point to things like volatility in digital asset markets, the burden of regulation and compliance, and just intense competitive pressures as key business risks.
Makes sense.
And their heavy reliance on USDC, its continued stability and adoption. That's crucial. Any sudden regulatory crackdown, maybe a technical failure, or even just a big shift in market sentiment away from stablecoins could really hurt their value and operations. The nature of this market just introduces a high level of uncertainty. Every investor has to weigh that.
And what about profitability? We talked about the big loss, but you mentioned it was due to one-offs. But the point about operating expenses seemed important too, especially with all these growth plans. Are they going to start making money soon, or will costs keep rising?
That's a really crucial aspect for potential investors. The company's heavy investments building out the platform, ARC, expanding partnerships, all that is expected to drive operating expenses significantly higher for 2025. They're projecting somewhere between $475 million and $490 million in operating expenses. That implies something like a 24% growth rate just in expenses.
So spending a lot to grow.
Exactly. And that level of investment is expected to keep margins under pressure in the near term. It means the company might not achieve clear, sustained profitability for a little while yet. This current lack of consistent profit is a key factor. It limits its appeal for some long-term investors who really prioritize established earnings over future growth potential. It's that classic growth stock dilemma, Spend now for potential big gains later, or wait for proof.
Okay, so bringing everything together, the strong growth, the innovation, the competition, the valuation, the risks, the spending. What's the overall investment thesis summary? Is Circle Internet Group a buy right now? Where do we land?
Well, based on our analysis of all these factors, the overall rating probably leans towards, let's say, a 5.5 out of 10, maybe a cautious hold. Circle definitely has strong points. Good industry position, brand recognition, that regulated approach, significant insider ownership still, those are all real positives. But
Sure.
You have the insider selling, even if potentially routine, the high-risk nature of the crypto sector itself, the current lack of sustained profitability we just discussed, and that valuation uncertainty. All those things kind of limit the immediate upside potential, especially for conservative investors. So what this means is the company seems best suited right now for highly risk-tolerant investors, people who are comfortable with significant volatility and the more speculative side of the crypto market.
And for others?
For broad-based long-term ownership, maybe a less compelling case exists right now, at least until the operational scale translates more clearly into consistent profitability. For the moment, the investment horizon might be more favorable for short-term trading, playing the volatility and news flow, but it's probably not broadly recommended for a core long-term holding at this specific point in time. It's worth noting the Zacks rank also gives it a #3, which is a hold. That suggests maybe waiting for a clearer signal or perhaps a better entry point down the road.
So to answer our initial question then, is Circle Internet Group a good time to buy now? Our analysis suggests a kind of nuanced hold for many. There might be opportunities for short-term traders, sure, but long-term investors probably need more clarity on sustained profitability before jumping in. We've walked through the really significant growth in USDC, those exciting new platforms like ARK, but also balance that with the realities of a high valuation, the insider selling factor, and the inherent, considerable risks tied to the crypto market itself.
Right. And this raises a really important question, maybe something for you to think about going forward. As stablecoins become more and more integrated into traditional finance, which seems to be the direction things are heading, how will this rapidly evolving global regulatory landscape continue to shape the playing field for companies like Circle? And maybe even more fundamentally, what impact will all of this ultimately have on the very future of money itself? It's certainly something to keep a very close eye on.